So this afternoon, the Federal Reserve raised the Fed funds rate by 0.75 or 0.75%. Now, most people think, oh, that means that all rates are going up, but that is not true. Mortgage rates are actually going down, and they have been doing so for about the past week. The reason for that is when the Federal Reserve increases the Fed funds rate, they're doing so to hedge off inflation. And inflation is bad for the price of bonds, and mortgage-backed securities are traded like bonds. So if you look back at the historics, during times of recession or increasing Fed funds rate, typically mortgage rates get better and the housing market does well. Now, the increase in federal funds rate will affect the interest rates on things like credit cards or variable rates of equity lines of credit. But the fact is that we're seeing mortgage rates come down, we're seeing inventories come up, sellers become more realistic. So we're moving into a period of time here where it's going to be a very, very good buying environment. Now, this afternoon, after the Fed's announcement, Fed Chairman Powell got on television during his news conference and said that they do not think that the economy is currently in a recession. That made the equity markets go up, mortgage-backed securities continue to increase, pushing rates even further lower, and 10-year Treasury yields moved lower. So everything is kind of baked into the pie here. We're moving into a more advantageous interest rate environment, and with inventories coming up, we're going to have buyers having more options, no more bidding wars. There's going to be more availability and probably more affordability in housing. Be well.